Hello everyone, welcome to the market opening bell for Thursday, May 7th. Your 10-minute guide to the stock market. Market sentiment is optimistic about a potential US-Iran agreement. US stock futures rose, driving Hong Kong stocks higher in early trading. The Hang Seng Index opened up 131 points, then extended gains to close at the day's high of 26,213, up 315 points or 1.2%. The Asia Index rose 70 points or 0.8% to close at 8,800. The Hang Seng Tech Index gained 39 points or 0.8% to close at 4,969. Total market turnover reached $304.7 billion. Southbound stock connect funds recorded a net outflow of 8.565 billion Hong Kong dollars. Key flows included net buying, Cambridge Technology, totaling $1.44 million. Net selling, Checker Fund 3.739 billion, Tencent 2.397 billion, Xiaomi 1.049 billion, Hang Seng China Enterprises Index ETF 741 million, PopMart 388 million, Yangtze Optical Fiber and Cable 266 million, Hua Hong Semiconductor 168 million. According to statistics, Southbound funds have net bought CNOOC for 16 consecutive days, totaling 7.022 billion. Net sold Alibaba for 9 consecutive days, totaling 4.862 billion, and net sold Tencent for 6 consecutive days, totaling 6.117 billion. Technically, the Hang Seng Index has reclaimed the 26,000 point level. Although it reached an intraday high of 26,213 points, it has not yet broken through the May 4th high of 26,326 points. Nevertheless, the closing index set a new high since April 21st when the Hang Seng Index hit its peak of 26,529 points. With the US-Iran situation easing and strong performance in overseas markets, the Hang Seng Index is expected to challenge the 26,529 point level. If it successfully breaks above this high, the next target would be 26,700 points. On the first trading day after the May 1st holiday, all three major A-share indexes opened higher and continued rising, with the China export performing strongly, once up over 3%. Shanghai and Shenzhen turnover surged to over 3.2 trillion yuan. The Shanghai Composite closed at 4,160, up 48 points or 1.2%. The Shenzhen Component Index closed at 15,459, up 352 points or 2.3%. The Chinex Index closed at 3,778, up 101 points or 2.8%. The renminbi central parity rate against the US dollar was set at 6.8562, up 66 pips from the previous day, the highest since March 24, 2023. RatingDog's April China PMI shows strong performance, contrasting with the weaker official PMI and highlighting robust expansion momentum in the private economy. Manufacturing PMI came in at 52.2, beating market expectations of 51 and the prior reading of 50.8, the fastest expansion since December 2020. Production and new orders indexes improved markedly. Despite rising raw material costs, especially crude oil, and logistics delays caused by Middle East conflicts, corporate confidence remained high. Services PMI rose to 52.6 from 52.1 in March and has stayed in expansion territory for 40 consecutive months. Although new export orders dipped slightly due to softer global demand, domestic demand remained the main growth driver. The Composite PMI Output Index climbed to 53.1 from 51.5 in March, indicating a solid start for China's private sector output in Q2. Media reports citing two U.S. officials and sources familiar with the matter say the White House believes it is close to reaching a one-page memorandum of understanding with Iran to end the war and establish a framework for more detailed subsequent nuclear negotiations. The 14-point memorandum, reportedly just one page long, would announce the end of the war in the region and initiate 30 days of negotiations for a detailed agreement, possibly held in Islamabad or Geneva. Iran's restrictions on shipping through the strait and U.S. naval blockade would be gradually lifted within those 30 days. On Iran's nuclear development, the memo states that Iran will suspend uranium enrichment activities for at least 12 years, though the exact duration remains negotiable. On the news, international oil prices fell more than 10%. WTI crude broke below $92 and Brent lost the $100 mark for the first time since April 27. Spot gold broke about $4,700 per ounce. Hong Kong Gold-concept stocks rallied across the board. Chow Tai Fook issued a profit warning, expecting net profit for the year ended March this year to rise 45 to 55% year-on-year. The main reasons are higher gold prices significantly boosted the value and gross margin of gold jewelry inventory, a more favorable sales mix in retail and high-margin jewelry, and strong operating leverage from strict cost control. Same-store sales in Hong Kong and Macau surged about 40% in Q4, driven by tourism recovery and favorable tax policies, boosting foot traffic. In mainland China, despite macro headwinds affecting demand, directly operated stores showed resilience. The group is actively rolling out new image stores and brand transformation. Average monthly sales of new stores, around 1.4 million yuan, are significantly higher than old or closed stores, improving retail efficiency. Overseas semiconductor stocks surged. Cambrican jumped 7.4%. Hong Kong listed peers also rose sharply. SMIC up 5.7%, Hua Hong up 9.3%. Reports say China's National Big Fund is leading the first-round financing of DeepSeek with a possible valuation of around $45 billion. Other investors in talks reportedly include Tencent, though the final lineup is not yet confirmed. If true, the big fund's cross-sector investment in an AI model company marks a major strategic shift in China's chip industry, moving from pure hardware manufacturing to deep chip model synergy. The far-reaching impact on the chip sector can be seen in four key dimensions. 1. Accelerating the NVIDIAization of domestic chips. DeepSeek's latest V4 series models explicitly support Huawei Ascend 950 supernodes and have completed adaptation with 8 domestic AI chip makers, including Cambrican, Hygan, and more threats. 2. Re-rating domestic computing chips from usable to high performance. The big fund's participation injects market confidence, proving domestic computing power can support trillion parameter top-tier models. Upstream players in semiconductor equipment, advanced packaging, and memory will also benefit from rising localization rates, expected to reach 70% by 2030, prompting the market to revalue domestic computing power. 3. Building a domestic chip plus domestic model. Commercial closed loop. DeepSeek V4's localization drastically lowers AI inference costs and helps form a complete model chip cloud ecosystem in China. 4. Vertical integration of strategic resources. Previously focused on chip manufacturing, the big fund's leadership in AI model financing shows the national strategy is now vertically integrating computing supply and computing demand to ensure high-end AI model development is not disrupted by chip shortages under U.S. export controls. Separately, driven by strong AI chip demand and reports of cooperation with Apple, Samsung shares soared on Wednesday, hitting a record high of 270,000 Korean won, up 16.13%, with market cap surpassing 150 trillion won, equivalent to 1.03 trillion US dollars. It becomes the second Asian company after TSMC to exceed 1 trillion US dollar in market value. Philips Securities offers South Korean stock trading services with online commission at 0.35% minimum to 20,000 won per trade. No custody fees for Korean stocks. Well-known analyst Ming-Chi Kuo posted on X that OpenAI may be accelerating development of its first AI agent smartphone, targeting mass production as early as the first half of next year. Reasons may include a favorable year-end listing window and intensifying competition in the AI agent phone segment. MediaTek is currently the most likely to exclusively win the processor order. The device is expected to use a customized version based on the Dimensity 9600 and will be produced on TSMC's enhanced 2nm process in the second half. If development goes smoothly, shipments are projected at around 30 million units combined for next year and the year after. Hong Kong listed property stocks mostly rose. Recent positive news in the real estate sector has been frequent, from central government top-level guidance to local detailed rules, forming comprehensive policy support. Following the central tone, major cities including Guangzhou, Shenzhen, Tianjin, Suzhou, and Wuhan rolled out new property policies around the May 1st holiday, creating a wave of policy momentum. During the May 1st holiday, Shenzhen recorded 396 new and second-hand residential transactions citywide. New homes saw 275 registrations, up 45.5% year-on-year. Second-hand homes recorded 121 transactions, up 80.6% year-on-year. The Nasdaq and S&P 500 hit new record highs again on Wednesday, while oil prices fell after reports emerged that the US and Iran are close to reaching a peace agreement. The fear gauge VIX index rose 0.01 point or 0.06% to 17.39. The Nasdaq surged 2% to 25,838. The S&P 500 climbed 1.5% to 7,365, setting a new all-time closing high and posting its largest single-day gain since April 8th. The Dow Jones Industrial Average rose 1.2% to 49,910. The Nasdaq China Golden Dragon Index, which tracks Chinese stocks, jumped 237 points or 3.5% to close at 10,127. All sectors closed higher except energy and utilities, with industrials and technology leading the gains, each up 2.6%. AMD shares skyrocketed nearly 19%, making it one of the best performers in the S&P 500. The chip maker released better than expected first quarter results after the market closed on Tuesday, driven by strong data center revenue growth fueled by artificial intelligence infrastructure demand. Analysts expect AMD to capture roughly half of the server CPU serviceable market, which is projected to exceed 120 billion US dollars by 2030. Nvidia rose 5.8%. The company announced a multi-year collaboration with specialty glass manufacturer Corning to support AI factory construction and significantly expand optical fiber connectivity manufacturing capacity. The partnership will increase Corning's optical fiber connectivity manufacturing capacity in the US by 10 times and boost its domestic optical fiber production capacity by more than 50%. The expanded capacity will enable hyperscale data centers to deploy NVIDIA, accelerating computing at scale. Corning shares rose 12%. Walt Disney reported second quarter results that beat market expectations with revenue growth across all business segments. The company also reaffirmed expectations for accelerated growth in the second half of the year. Adjusted earnings per share came in at $1.57, higher than $1.45 a year ago and above the consensus estimate of $1.49. Revenue rose 7% year-on-year to $25.17 billion, beating expectations of $24.87 billion. Disney expects adjusted earnings per share for fiscal 2026 to grow 12%, excluding the 53rd week impact, or 16% including it, compared to previous guidance of double-digit growth. The company reiterated its forecast for double-digit adjusted earnings per share growth in fiscal 2027. Its shares rose 7.5%, making it the best performer on the Dow. Restaurant Brands International, the parent company of Burger King, reported first quarter earnings and revenue that exceeded market expectations, with comparable sales growth in line with forecast. Adjusted earnings per share rose to $0.86 from $0.75 a year earlier. Revenue increased 7.4% to $2.26 billion, beating estimates of $0.83 and $2.24 billion respectively. Comparable sales grew 3.2% year-on-year, meeting expectations. Net restaurant count grew 2.6% compared to the 3.3% growth in the same period last year. The company maintained its outlook for comparable sales growth of over 3% from 2024 to 2028, with net restaurant growth exceeding 5% by the end of the algorithmic period. On the economic data front, ADP reported that private payrolls increased by 109,000 in April, up from 61,000 in March, the fastest pace in over a year. However, the figure fell short of market expectations of 120,000, indicating a stable labor market that is even showing signs of heating up despite the outbreak of the Iran conflict. Our stock pick today is Prudential, stock code 2378. Prudential delivered another strong set of results in the first quarter of 2026, with double-digit growth in new business profit once again. The performance was broad-based across all business segments. Both annualized new business premiums and new business profit margin rose, confirming that the group's multi-channel, multi-market business model, together with disciplined execution and a continued focus on driving high-quality growth, is working effectively. The group remains committed to value creation, continuously strengthening its distribution capabilities and enhancing customer experience. It is well positioned to capture structural growth opportunities in Asia and Africa, and is confident of achieving double-digit growth in key financial metrics for 2026 and meeting its 2027 financial targets. In the first quarter, all segments recorded growth, with Hong Kong, Mainland China, and Malaysia delivering double-digit increases. Annualized new business premiums rose 6% year-on-year to $1.823 billion, while new business profit increased 10% to $686 million. The new business profit margin expanded by 2 percentage points. In Hong Kong, both the agency and bancassurance channels reported growth in new business profit, with margin expansion mainly driven by a high proportion of health and protection products in ANP and pricing adjustments. The Mainland China joint venture, CITIC Prudential Life, continued the strong ANP momentum seen in the second half of 2025. In Malaysia, new business profit grew, driven by the agency channel. Although bancassurance volume softened slightly, the profit margin still improved thanks to further optimization of the product mix. In Indonesia, new business profit saw only modest growth due to a strong base last year, but bancassurance recorded double-digit growth, benefiting from deeper cooperation with BSI. The group will continue to focus on recruiting high-caliber talent for the agency channel to boost activity. In Singapore, strong customer demand for savings and wealth products drove solid A&P growth, with the agency channel performing particularly well. The group is taking targeted measures to expand its health and production product portfolio in response to changes in co-payment requirements for certain health insurance plans announced earlier. The growth markets in other segments also delivered growth, mainly powered by Thailand, supported by sustained strong demand for savings products, as well as the associate ICICI Prudential Life in India. Although Taiwan's overall growth moderated compared with previous strong periods, progress in the broker channel remained satisfactory. In asset management, East Spring recorded net fund inflows. Assets under management stood at $268.9 billion as of 31st March 2026, supported by positive cash flows from the group's insurance business. This reflects the scale benefits and synergies created by integrating life insurance and asset management capabilities. Suggested buy price $119, target price $135, stop loss $112. I do not hold the above stock.